better than the Singapore GRMs based on the fourth quarter, and with crude prices being benign, would you say that these are companies to look at?
I would avoid,
Okay.
there may be an opportunity to make money, but as you rightly pointed out, the oil prices are extremely volatile, and some of these companies have, once in a while hit from the inventory losses by holding the crude oil. And second, the refining margin also highly volatile. Even for analysts like me with a good amount of experience, we find it difficult to predict, in a stable manner how these companies would perform, even for next 2-3 quarters. So I would prefer, because you need to have a lot of confidence and clarity before you invest. That's a basic funda I follow. So instead of investing in oil marketing companies, I would invest in Coal India. It's a phenomenal stock. If you look at the investor presentation, they have paid about 1,71,000 crore as a dividend to the investors after they went public, and sitting on a huge cash. And coal outlook remains very strong for next 10 years, and the dividend yield will be close to 7% for current fiscal, and also diversifying into the other minerals like graphite, and a lot of expansion in solar power. They are talking of 9,000 megawatt of solar power in the next 7 years. So this stock gives me phenomenal confidence. I have no fear of going wrong miserably in this stock, whether for next 2 quarters or for next 2-3 years.
Point that you make, Mr. Choklingam, and I think a lot of our investors that are tuning in will have an experience over the last 4 to 5 years. And interestingly, I was speaking to Mr. Ramesh Damani yesterday. This is an interview that plays out tomorrow on MoneyWise. And he was talking about the last 30 years and saying that many strategies have emerged. But the one that has stood the test of time is value. So if you see that a valuation of a strong company is relatively is not being priced appropriately, then you should go and buy it, even if there is a period of consolidation, because as you've pointed out, there is earnings through dividend distribution. Would you agree?
Certainly. He is most respected by all of us. We consider him as one of our gurus in the market. So he made a lot of sense. I just want to add a few points. Value investing goes through pain. I was put under tremendous pressure for recommending PAC at 200 rupees adjusted for bonus 6 years ago. So, but it plays out. So 2-3 facts I want to say that in my learning in the last 35 years, the value stocks, they test your passion sometimes even for 3 to 5 years. But when they catch up and reward you, there is no comparison. And second, in contrast to value stocks, when you invest in a momentum stock, like for example, the Brightcom, EKI, Gensol, there is enormous risk. There is enormous risk. So you have to understand, a detailed manner before you buy stocks at 50p, 40p, all that. So therefore, the value investment for retail investors really, great help. But one has to be really long term. Minimum 2-year investment horizon one should have.
The important takeaway is that do not run behind only momentum, but you should also take a look at where the valuation stands, and value company over anything while investing comes into picture. All right, the next question is from Ravi, who's calling in from Hyderabad. Ravi, a very good morning to you. How can we help you?
Yeah, very good morning. Yes, my query is regarding ICICI Bank.
Okay.
So, at what price it is good to buy?
Okay.
And can I expect for more correction going forward?
Okay.
And I can hold for 1 to 2 years.
1 to 2 years. Okay, got your point, Ravi. I'll quickly come to you, Kush, on this one. In terms of the earnings for ICICI Bank, it is one of the top performer in terms of the Nifty 50 company. Overall net provisions, net interest income did improve. Asset quality also improved sharply. But with respect to where charts are concerned, do you think this is the right time to enter?
So first, let me start with the fact that, I'm very bullish on ICICI, especially if the outlook is, 1 year, 2 year, as, viewers just mentioned. However, from a tactical standpoint, my suggestion would be to wait up before, you buy right now. I think a good entry point will be closer to the 1400, 1375 zone, perhaps even 1350, 1350 to 1400 zone. Now, the reason I say that is because while the likes of HDFC Bank and SBI in the heavyweights have already seen some sort of profit booking, ICICI is yet to see any kind of a meaningful profit booking. So that is par for the course, especially if you look at the weekly and the daily setup. They are suggesting negative divergences on multiple legs, which is not really a healthy sign. And while it might right now consolidate with a positive bias, these are indicators that there could be some correction or some profit booking along the way. Mind you, the correction need not be so deep. Hence, I'm suggesting about 1400 to about 1350 kind of zone where he could start accumulating. On the whole, the outlook is very bullish. I think he can expect levels of 1550 and about 1625 also, in the coming year's time frame. So, not a bad idea to accumulate, but on declines closer to the 1400 mark would be a good entry point.
View on the outperforming frontline bank, ICICI Bank. We've got the next question on a stock in the telecom space, posted its numbers earlier in the week, Bharti Airtel, and a decent set of numbers. The average revenue per user stood at about 245, if I remember correctly. I've not looked at it on my screen right now, but looked good. Harish from Bengaluru is looking at a strategy where he's adding this as a portfolio stock, Mr. Choklingam, and he's looking to accumulate 2 shares of Airtel every week as a strategy. Is that something that you can recommend?
Yes,
not every week, sorry, every month. Every month, yeah.
So SIP is always good in equity asset class because Indian market is extremely known for volatility, even including large caps. And coming to Bharti Airtel, yes, the telecom business is going to remain very robust. The tariff would be allowed to steadily go up because that's the only way you can revive Vodafone. And it's not good for third player to get eliminated, which is not good for the society. So definitely there would be a very friendly policy towards the telecom sector, and also it's a consumer oriented. And considering all that, yes, it's a good long-term large cap stock.
That's the view with regards to where Bharti Airtel stands. Our next question is from Raghu, who is calling in from Bengaluru. Raghu, a very good morning to you. How can we help you?
Good morning. I hold Adani Total Gas 400 quantity. Buying price is 910.
Okay.
So I hold this stock from last 1 year.
Okay.
I'm looking for next 1 year. I just wanted to know, is it good to average or hold or exit in loss?
Okay, got your point, Raghu. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, in terms of Adani Total Gas, for Q4 earnings, volume was up 13%. CNG network also increased to around 647 odd stations. What's the view with regards to where fundamentals stand for the company, and is it a good time to average out for the next 1 year?
Yeah, one can hold it even for 1 year time frame. And in case it starts falling, even 2-3%, one can accumulate with 1 year investment horizon.
Okay, standard disclaimer, Adani Total Gas is also a part of Adani Group of companies, and as Alex mentioned earlier as well, NDTV Profit is also a part of Adani Group of companies. Alright, the next question is from Sulochana, who's writing in from Visakhapatnam. She's holding HPL since a year now, and she's bought at the levels of 617 and holding 700 odd shares, and wants to know as to what should be the next course of action for her. Should she continue to hold, or should she sell? Kush, I'll quickly come to you on this one. HPL Electric and Power, what are the charts indicating?
Well, like most of the mid-cap stocks, this one's also starting to see some traction. I can see that there is accumulation that is happening at least in the last 3 to 4 sessions. If you look at the stock, there has been accumulation. The stock's trading with a positive bias. Near-term resistance near the 455, 460 zone, but I think once that is taken out, the stock could well move towards the 500 mark and higher. I think there could be some time before she sees her buying price, but on the whole, the things for HPL are starting to shape up well. I would suggest a hold on this one. A stop loss on this one comes close to the 395 zone.
Paramjit is calling us from Himachal Pradesh. Paramjit, very good morning to you. How can we help you today?
Morning, sir. I am having 100 shares of Force Motor at the rate of 6,200.
Wow. Okay. When did you buy this?
2 months back.
Okay. Okay. What a great entry point. Yeah.
Yes. Want to know long term as well as short term.
Okay. All right. And when you define long term, Paramjit, what is it?
2 years. 2 years. 2 years.
Okay.
2 years.
So are you looking for a technical view, or are you looking for a fundamental view?
Both.
Okay. So in this case, I'm going to make an exception because you've made tremendous gains. Mr. Choklingam, would you say that on the fundamentals, holding at these levels is appropriate for Force Motors?
It has done phenomenally well in the last 10 years, no doubt about it. But, the price also reflects, the achievements, in my view. Trading at around, 28-29p on FY26 expected earning, which is fairly priced. So anything beyond 11,000, I believe it's a good sell.
So this is a stock, of course, in the automotive space. They've got manufacturing in Pune, as you know. It's up 62% year to date in 2025. Wondering what the advice is on the charts from the short-term perspective, since Paramjeet is sitting on gains of 4 lakhs or over, if I'm not mistaken, 4.5 lakhs. Kush, what's the view?
I think this is where you could say that going against the tide is actually profitable. Money is made by courage more than anything else. So kudos to him on buying this stock when perhaps no one else was as interested. So kudos on that. Now what we are seeing is that on the weekly setup, there's a very clear breakout of the rounding bottom formation around the 10,100 mark, and there is momentum catching up. The volumes in the last 3 weeks has actually have actually picked up, which is a very healthy sign. So if his view, as he rightly said, he's expecting a long-term kind of a view on this for anywhere from 12 to 24 months, he should continue to hold. However, there are now negative divergences setting up on the daily chart. So my suggestion would be to book out partially, and by that I mean about 25% or so, and re-enter close to the 10,000, 9,500 zone. But you wouldn't want to let go of the entire holding, right? So you could perhaps trade or book partially with around the 25% of your holdings, continue holding on to the rest of them. There's a good possibility that you could see 12,000 and about 12,800 levels, in the coming months' time.
Okay, so that's with regards to where charts stand for Force Motor. Very interesting moves, in fact, and significant amount of momentum seen in this particular counter. All right, the next question is on IRB Infra. Raja from Chennai is writing in, and he wants to know whether this is the right time to enter IRB Infra or not. 1 year is his perspective. Coach, from a slightly longer term perspective, do you think these are the right levels to invest in something like an IRB Infra?
So a lot of these stocks have started to run quite a bit, and there is all likelihood that this traction could well continue. I think this is a good time to enter IRB Infra. The reason being that it's made a good base. Now it's moving up. It's now taken out some of the near-term averages, heading towards the long-term average. So I think you could very well enter right now. Now it had a resistance around the 48 mark. So your stop loss is very clear. Maybe just under that, which is 47.5 is where you place your stop loss. On the way up, you're looking at targets of 54, and once that is taken out, even a 58. So the risk reward ratio on this one is very attractive. You are seeing volume pickup as well. So on a lot of counts, it does fit the bill. So with the stop loss around the 47.5 mark, this is a good time to enter, IRB Infra.
Good time to enter IRB Infra with respect to where charts are concerned. All right, the next question is from Ronak, who's calling in from Odisha. Ronak, a very good morning to you. How can we help you?
Also, I'm a no voice investor, and my query is: should I enter Nestle India now, or we can see any dips further?
Okay, and you're wanting to invest in this from a longer term perspective?
Yes.
Okay, so you want a fundamental view on this. Okay, I'll take this up with Mr. Choklingam. Mr. Choklingam, in terms of Nestle, unlike FMCG companies, it's been a stable, steady growth. It's not like they're outperforming their peers or underperforming. Overall, it's a steady space of growth. What's the view like from a longer term perspective? Should Ronak make an entry in this counter?
It used to be a great growth company, but in line with the whole industry trend, all are suffering, finding it difficult to post a double-digit volume growth. Surprisingly, couple of FMCG industrial stalwarts also, leaders also mentioned that the recovery might take place in next financial year, FY27. I also believe that, the poor single-digit growth volume would continue in FMCG space. So in contrast to FMCG, I would prefer stock like M&M, again index stock, because both automobile segment and tractor segment, this company is doing phenomenally well. And though overall automobile sector is growing in poor single digit, it's a volume. This company is beating, all the competitors by big margin. And I believe the growth story would remain intact for M&M. So M&M would be better bet than FMCG stock like Nestle. That's my view.
Interesting. And a lot of people have that view in the consumption space. Steer clear of the FMCG space for now and see how that develops over a period of time. And of course, Mr. Choklingham has called FMCG companies SMCG companies, slow-moving consumer good companies. So let's see if that view changes in the second half of FY26. But we've got a caller. Dheeraj is calling us from Hyderabad. Hi, Dheeraj. How can we help you?
Hi, sir. Good morning.
Good morning.
Sir, my query is regarding Tube Investment of India.
Okay.
They are declaring the results today. They are declaring the results today. Can I buy Tube Investment of India at current levels or NTPC at current levels or any other suggestions which are given by you? Or should I wait for the market to correct more?
Okay.
Is my question, sir.
So
is it the right time to enter into Tube Investment or NTPC is my
Got it. I got your question. I just need to identify whether you are buying this on the fundamental basis for the long term or is it a short term trade you're looking at?
Sir, for a trading view for the next 1 month or below that.
Okay, I got it. All right, Dheeraj. So let me go across to Kush for this one. Kush, Tube or NTPC, which one would you suggest? Or another one?
So first things first, I mean, I usually don't recommend a trade, on the day of the result because it's a fairly volatile day and it's a binary event, right? And it could go either way. But let's just keep that aside for a bit now. If I were to just independently, agnostic of the fact that the results are being announced today, if I were to look at the Tube investment, I think it's shaping up rather well. It's seeing good traction as well. The momentum indicators are, turning positive. Also, there's a positive, crossover, a golden crossover of the 20 and the 50-day moving average. So those signs are healthy. My suggestion would be to stick to Tube investments and not look at NTPC just yet. The setup there is a little somber, a little muted. But maybe if you could just wait for a day, let the results, event be out of the way, and then he could consider, getting into Tube investments. Stop loss on this one would be 2,800, and on the upside, you're looking at targets of 3,300 and 3,500. So Tube investment does look well. It's just that on the day of the trade, on the day of the result, you might want to perhaps avoid a big trade on this one.
Avoid trade on the earnings day is the view, but can take a call post its earnings is the view coming in from Kush. All right, it's time to slip into a very short break, but we'll be right back answering more queries and an interesting conversation with AkzoNobel's management on the other side. So stay tuned.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. But, we also have a conversation with AkzoNobel's management today. The company came out with its earnings, where the numbers were largely in line. There was a double-digit growth in terms of its B2B business. Revenue was up 9%, EBITDA up 32%. Margins have also improved to 13.7%. And to discuss as to how the quarter has gone by and how things are shaping up for FY26, we're joined by Rajiv Rajgopal, CMD of AkzoNobel India Limited, joining us now. Rajiv, a very good morning to you and always a pleasure speaking to you. My first question is that your sense of how the quarter has gone by, because it's been yet another stunning quarter for you, and overall, what has the volume versus value growth been like?
Thank you, Mahima. Thank you for having me on your show. First and foremost, good morning to all the viewers. Look, I think the quarter is a better than expected performance. Honestly, if you look at our numbers, we've had industry-leading growth. We've grown at about 5%. And the good part is we are seeing decorative slowly come back in it. We've had a sort of a flat sort of a performance, but still considering the sort of competitive intensity and the fact that we've really grown in premium, which is why our margins are looking very good. And we chose not to play in the mass and economy where there was a massive amount of discounting happening in towards the end of the quarter. And we've seen the growths come back in April. I think it's a strong performance. In our coatings business vertical, we've sort of had double-digit growth, and this is continuing over the many quarters. Overall, I would say that we've had a very strong growth. This is another quarter of market share gain, and we remain focused. We are focusing on our brand innovation, looking at how we can get in meaningful differentiated products into our customers, and making sure that we are able to deliver leading performances.
Right, Rajiv, interestingly, you also mentioned that you've gained market share this quarter as well. Just wanted to understand as to, a rough figure as to where your market share stands right now versus what it was, let's say, 2 years ago, so that we get a sense of how much of a market share gain has happened for AkzoNobel.
See, we've gained approximately about a 0.6, 0.7 if you take a 2-year period, and that's meaningful in a segment like decorative, particularly with the competitive intensity that is. For two reasons. One, we have a higher skew towards premium products where I think our brand and consumer disposition is fairly high. And so hence our ability to really deliver the promise of quality, Dulux Assurance, has been very, very strong. Over and above that, we've launched innovative products. Right at the top end, we've launched Dulux Velvet Touch Eterna, about 4-5 months ago. It's doing very well. We've got very good reports in terms of the product quality. So our focus really has been around building and making sure that our premium portfolio and decorative is insulated. On the mass and economy, we are reworking a few tactics, I would say, because I think our products are fairly good, but we really have to rework tactics and a bit of distribution so that, in the quarters ahead, we also start pulling that part along. Yeah, so, to answer your question, I also say that, look, I think in our coatings businesses, whether it's marine and protective, our powder coating business, our industrial coating business, we've had very strong growths. Yeah, so I think overall, I would say that the market share gain has been about 0.6 to 1 if you look at the company as a basket, which is what all of you've picked. And I think I'm pretty proud of what the team is doing under the current circumstances.
Rajiv, hi, Alex here.
Hi, Alex.
The perception when you're looking from the out in, and a lot of investors are worried about this, is that there is a considerable amount of pressure in terms of pricing. There's a lot of action in terms of competition coming through. How do you react to that? And would you say that as a result of this, an investor should be okay with contraction in margins? What is your focus on? Are you focusing on volumes, on pushing certain segments? How are you dealing with it?
So I think we are trying to gainfully gain market share. So hence, obviously, it is related to volumes. But at the same point of time, we are making sure that the contraction in our EBIT margins are not very high. If you look at our EBIT margins, and that tells you a story of a player with the sort of market share we have, our EBIT margins are almost 13.4, and clearly, I think if you just look at the EBIT margin percentage of the last quarter, we are just behind the market leader, which I think is around 15.9, 16%, right? It tells you the profile of the business and how we run this business. So I think that answers your question, Alex. I think, look, we are trying to make sure that we operate within a band. I've always said that, look, to me, I think for a number 4 player, particularly from a decorative perspective, margins of between 12.5 to 14 is ideal, but 13 to 15 is what we normally try and target. And I think we are on track on that. Yeah. Look, I think the fact is the industry now, if you look at the numbers that have come so far, is seeing some growth. I mean, you've also got to realize that the new entrants have added potential volume and value. However, obviously the margin profiles are significantly lower. So I think from our perspective, it is really saying, how do you meander this? How do you use a combination of mind and marketing strategies to make sure that you're playing actively without really bringing down the margin profile, the EBIT margin profile of your business? That's really the strategic challenge, and that's what we've been working. How are we doing it? As we speak, we've made significant investments, and that's what is seen in our OPEX cost on digital. Working with leading firms to really try and put a digital roadmap to improve, enhance customer experience, and make sure that we are able to target our consumers, customers in a much more meaningful manner. So we really focused on building the next step, because both digital it drives customer experience and it drives productivity from a long-term period. So that's what we are doing. We are doing a lot of pilots across different markets as we speak. We are looking at, we've got an innovation workshop very soon where we are going to look at meaningful portfolio over the next 1 year.
Okay.
So really, how do we actively partake and start growing the market?
Okay. You made your point very well, Rajiv. I'm just wondering, for an industry that is now coming to terms, I think, with a single-digit volume growth, does that change at all? And this is something that your investors are going to be very curious about, because ultimately we say that you're going to manage your margin trajectory in a certain band. It's a tough working environment. Does the industry as a whole start seeing a higher trajectory of growth? When does that take place? And what are the factors that need to come into play for that to take place?
So I think that's a good question. First and foremost, two things. So first and foremost, to answer your question, we believe that this year we would get back to mid-single digit value. Volume will be a little higher than value in our case, because we are a very small player in in segments like putty and economy, etc., relative to the other players, right? So I think, to answer your question, that's the first from our perspective. As far as the industry is concerned, I do think that it'll start slowly picking up. Look, the disruption that had to happen has by and large happened, right? I mean, I'm saying that, you can say another 6 months or a year, but I think over that, I think if you look at structurally, this industry will get back to a double-digit growth. Now, obviously, the players who invested behind the brand distribution, making sure that you're driving meaningful innovations for the consumer, are the ones that are going to win, right? So I think it's about saying, how can you maintain the price premiums that we currently have, right, versus our competition? And that's really the strategy that we are working on, Alex.
Rajiv, a quick question on competition. You did mention that you're the fourth best player in this industry. With the new entrant, plus we're seeing big players also taking away market shares. What's the view like and sense in terms of competition, and what are the strategies in place to beat that?
So Mahima, just to correct, we are number 4 in market share, but we have leading industry performance from last year. I think all results haven't come, but it'll not be in vain to say that, look, I think so far, if you look at the full year performance of last year, we would be the leading player. So I just want to correct that. Yeah. Now, look, to answer your question, look, I think the strategies are not very different in paints. I think this is, first and foremost, what is our strength as, AkzoNobel? I think the strength is in the brands and the quality of the products that we offer to consumers. It's about the deep customer relationships. And more important, we've got technologies which are definitely ahead compared to many of our peers in the market. So I think that's what we are going to leverage. How do we really play around, not just on pricing per se, but how do we really partake in making sure that we are offering distinctive propositions to consumers that will impact and be beneficial in the markets we serve. So, for example, we are looking at innovations which are a little ahead in terms of how it can be relevant, whether it's pollution or whatever it is. There are certain platforms that we are working on to try and make sure that we have meaningful propositions to address consumer perspective. Mahima, I hope I've answered your question.
You did. Rajiv, as best as you could. And thanks so much for joining us this morning. Wish you all the best. A tough operating environment, no doubt, but thanks so much for taking the time to clarify all of those things.
Thank you for having me on your show.
Pleasure. All right, since we're on the topic, why don't we just round it off and take Mr. Choklingham's view very quickly on the paint space. Mr. Choklingham, you heard the management of AkzoNobel, and hopefully we ask questions that you might have asked. That really is the endeavor. But what would you say you would do as an investor? Should you double down on certain investments that you're making, or should you stay clear of the space for now? I think you might just be on mute, sir.
Sorry. I will sell paint stocks and shift to some quality stock in small and mid cap, or to the banking stock, particularly the public sector bank. Quickly, yes, the stock is down 25%, but still it is trading at 36 times on trailing earning. And when FY25, the revenue growth was hardly 3%. So I don't know why one has to pay 36 PE. That is a one point number. Second most important point is that all of us know Grasim and the Jindal Group are getting into paints. The one number which is carrying me is that the proposed capacity addition by this big player is roughly equivalent to 50% of the existing capacity. So when the industry is already struggling with a single-digit growth volume, I think this new competition, that too from a powerful industrial houses, is going to make things worse. Third, oil was crashing, but suddenly in the last 1 week, it went up by 8-9%. There is a possibility there could be some more rebound because of the trade deal between China and US, which would be negative for paint companies in the short term. So considering all that, on any rise, I would be a seller of paint stocks, including AkzoNobel.
Okay, so that's the view with regards to where the paint sector stands, and the view not looking very positive. In terms of the demand environment also, we'll have to wait and watch out for as to how Q1 pans out, because there's rate cuts, there's tax cut, there's 8th pay commission also coming in. But we'll have to see as to how that affects the discretionary spending overall.
Will paints be right on top of the order of priority in the list of things you could spend on?
Yeah. Absolutely. All right, the next question is from Kanti Bhai, who wants to have a view on two stocks, LTI Mindtree or Tata Motors. I mean, both of them. Coach, I'll quickly come to you on this one. Charts, how are they looking like for both of these counters?
So LTI Mindtree is shaping up rather well. If you see, on a weekly basis, the stocks actually run up quite a bit. Daily setup also looking rather encouraging. The volumes are a little thin, and that's perhaps not a great sign. But overall, there is price action, which is also which would then obviously be the priority. I think you could consider a buy in LTI Mindtree. On the upside, you're looking at targets at about 5,200, and once that is taken out, the 5,400 as well. There is a support zone near the 4850 mark, perhaps a little lower. That can be your stop loss. So that is the view on LTI Mindtree. As far as Tata Motors goes, this is a good buy from a 12 months to a longer time frame kind of a perspective, because the momentum is missing on this one. But the stock is very close to long-term averages, taking support, attempting a rebound, all of that. But because the momentum is missing, I wouldn't suggest a near-term trade. If you have 12 months or longer view on this one, with a stop loss around the 600 mark, you could consider Tata Motors as well.
I'm coming back to you on BSE Limited, and this is a question from Abhishek. It's a simple question: buy or sell at this point? It's a stock that is that has come up in the recent past as some of these capital market players have done well. Kush, would you suggest buying at this point?
So, Alex, no matter how bullish I remain on this space, I think from a risk-reward standpoint, BSE right now doesn't warrant a buy. It's actually gone into a bit of an overheated territory. Some negative divergences popping up. That said, volume accumulation keeps on happening, and the price actually keeps on shooting higher. But from a near-term perspective, I think we'd be better off waiting for a dip, maybe closer to the 6,500 to 6,750 zone. On account of profit booking, as and when that comes about, you're better off buying at that time. Again, gunning for targets of 7,200 and higher. But right now, I wouldn't buy. If I had, I would hold, because the momentum is still there. No signs of abating. And, this could perhaps, inch higher. The momentum could take it higher. So with 69.50 as your trailing stop loss, continue to hold. But fresh buy is an avoid. Closer to the 67.50 mark, 6,500 zone is where you should consider a buy.
Okay, fresh poison avoid right now as per question BSc. The next question is from Raju, who's asking on Muthoot Finance. He's saying there's a huge fall in Muthoot Finance. He'd bought 1,000 odd shares at 2,300 a piece and wants to know if there'll be a rebound in the near time. Now, in terms of what's not working for Muthoot Finance, the AUM growth was largely driven by gold prices. The loan accounts and number of customers were only up by 2% this particular quarter. Overall, they've maintained their gold loan guidance of 15%. And this will be reviewed in Q2 FY26 versus over 40% in FY25. So falling gold prices might be a risk for this particular counter. So overall asset quality in the MFI portfolio has also worsened, and the stage 3 in MFI book has also inched up significantly by around 207 basis points. So a lot of moving parts here. Mr. Chokalingam, I'll come to you on this one. Your view, whether one should continue to hold Muthoot Finance at this moment or not.
If somebody is holding, definitely they can continue to hold because stock also reasonably corrected. But fresh purchase I would not recommend now. I believe the gold prices would correct at least another 5 to 10% from current level, which would be negative. And also, if you look at the conference call notes of public sector banks like Canara Bank, I mean the competition is slowly getting heavily intensified in the gold loan segment from the banks, which have got access to cheaper deposits. So therefore, buying can be initiated in case Muthoot Finance falls at least another 5 to 10% from the current level.
That's a view on Muthoot Finance. And Mr. Chokalingam has pointed out certain banks that have a large holding in the gold loan space as well. Let's talk about Hind Copper, and the entire metal pack, as we pointed out at the start of this program, is doing well. I wonder if Hind Copper is doing okay. So it's not doing too much in trade today, down about 0.1% or so. The question is from Jaya, who's writing in from Bengaluru and asking what the best entry price is and what the view is for a year. Kush, on the charts, how does it look?
Rather exciting. I would suggest this itself is a good entry point for Hindustan Copper. The reason being 228, 230 have been a bit of a resistance zone. It's taken that out yesterday. Even today, even though it's a bit soft, it's trading above that resistance zone. So it's a good idea to consider a buy at the current juncture. What this also does is that it gives you a good risk reward ratio where your stop loss is close to the 215 mark, where the 20 and the 50-day moving average are nearly about colliding. And so that's a 15-16 rupees stop loss. But on the way up, you've got a 250 as the first target. Once that is taken out, you're looking at a 270 as well. So risk reward ratio is fairly attractive on this one. Breakout already there, sustaining above that on a muted day as well. So not a bad idea to consider at the current juncture.
So that's the view with regards to where Hindustan Copper stands. Our next question is from Harshit. He wants to know about Samvardhana Motherson. He's bought 800 odd shares and wants to know whether he should sell it by today or wait for a little longer. Kush, on the charts?
Well, it's gone into a consolidation mode. Volumes aren't really anything to write home about. Price action also rather muted. So, it's not got a lot of things going for it just now. If it's bought for a very, very short-term kind of a perspective, then I would suggest, yes, it's not a bad idea to, exit at the current level. The steam after, a rally from those 130 levels that started about, a month or so ago seems to be now just cooling off. So not a bad idea from a very near-term perspective to book profits or exit from Samvardhana.
All right, exit is a call in Samvardhana, and from an auto anch player to an original equipment manufacturer that is underperformed, Hyundai. This is Hyundai Motors India that we're talking, of course, about, and it's 1,960 is the price that Gautam has gotten it for in the IPO. The stock is currently trading below the IPO price. He's got 98 shares. He's wondering whether to hold or to buy more from the perspective of the next 12 to 18 months. Mr. Chokalingam, on the fundamentals, would you buy more, would you add, or would you hold, or would you exit?
I would exit if some investor is very keen on investing in automobile. M&M is better. But if you are looking for better opportunity in general in the large cap in the stocks segment, then SBI. Because as I mentioned earlier, the banking sector assures double-digit growth. It's one of the few sectors to grow the core business parameter in double-digit. So I would suggest M&M or SBI in the large cap space. instead of holding Hyundai.
All right, Sampath is calling us from Chennai. Hi, Sampath. How can we help you today?
Good morning. I have 1,000 shares of Gravita bought around 60, okay?
Okay.
I want to buy another 500. This is the right time.
First, Sampath, can you tell me the story as to when you bought this and what the thinking was?
Over a period of around 4 or 5 years.
Okay.
Long time back.
Yeah, and congratulations.
Averaging little by little, I bought them.
Yeah. Congratulations.
I'm the same Sampath who called you from Ooty. I'm back from vacation.
Okay, I'm glad. I'm not feeling jealous anymore. But let's
I want to buy another 500, Alex. Can I do it right now at this point of time?
I will ask your question, Sampath, but I just want to ask you very quickly. When you bought Gravita India, what was the thinking when you looked at the fundamentals?
Well, metal recycling. A lot of metal is being wasted. Recycling.
Okay.
It looks like a good company to buy.
Yeah. And so you're looking to hold for the long term,
right?
Yeah. So you're looking.
I'm in the long term. I'm for the long term. Yeah.
Okay. So let me take your question to Mr. Choklingam. Sitting on gains of 19 lakhs or thereabouts on this acquisition, 60 rupees is his acquisition price, Mr. Choklingam. This is the way that you buy and hold for the long term, and you keep averaging on the upside. So Kush has got a big smile on his face as well. So, but on the fundamentals, would you hold? Add more? 500 he wants to add right now.
I express view, but I would suggest the investor to take suggestion from our respectable colleague Kush, because I may go wrong on the basis of fundamental. It's a simple logical reason is that the great metal companies like Hindalco, Hindustan Zinc, which have invested heavily in plant and machinery technology, they are trading at anywhere from 15 to 24 PE. It is just recycling, melting and recycling and trading at over 40 PE. So fundamentally, it's very hard for me to give a buy call or hold call, but there is a chance of me going wrong because this stock has been a very tactical one and it has been moving up and going down a lot. So I would suggest Kush to give his suggestion rather than investor listening to my arguments.
Okay, fair point. All right, let me get a view then from you, Kush. What's the view on Gravita India?
So there is definitely an upswing that has resumed after those 1600 levels were tested for a while, and then the stock started to move up. However, there are a couple of technical parameters which suggest near-term resistance. So one, there is a falling trend line resistance which comes close to the 1960 level, the 200-day moving average close to the 2020 level. That might act as a bit of a resistance zone for Gravita, and it could spend some time here. So if I were to look at a very clear, clean view on Gravita as to when to add the fresh 500 shares, my suggestion would be wait for the 2000 level to be taken out. Especially if you're looking at it from a momentum play kind of a perspective, which by his investment strategy doesn't look like. But as I said, from a very clean view, technical clean view, 2000, 2020 are the levels that you should wait for. Once the stock clears that, I think any hangover, any supply zone will be taken care of, and then the stock could zoom higher. So it's an advice to once again average on the upside, and the level to watch for is 2020.
So that's the view with regards to where Gravita is concerned and technicals are concerned. Our next question is from Mahesh, who's calling in from Bengaluru. Mahesh, a very good morning to you. I believe you have a query on Page Industries.
Yeah. So I have 50 shares of Page Industries.
Okay.
At 28,000.
Okay.
So should I sell it or hold it as they are announcing the results today?
Right. Mahesh, you've bought it at, though it's a very expensive stock, but you've still bought it at attractive levels. Just wanted to understand your thinking behind buying Page Industries specifically. Can you hear me, Mahesh?
Okay. Yeah, I can.
Yeah, okay. No worries. I take this up with Mr. Chokalingam. As Mahesh rightly mentioned, Page Industries is set to announce its earnings today, and it is one of the beneficiaries of UK FTA as well, Mr. Chokalingam. What's the view like?
No, it's a great company, no doubt, but is it a good valuation? I have my doubt. The valuation comfort is not there. So post results, in case it runs up even 5%, I think it would be a good to sell with a short to medium term investment horizon. That's with investment horizon up to 1 year on 5% rise, it's a good to sell.
Okay, all right, so sell is a call on Page Industries. Hope that answers your question. Gentlemen, thanks so much for joining us this Thursday and for answering all the questions that you did. Before we wrap this program though, we should take a look at Petronet LNG, it's buzzing, and Somit is here to tell you why that is, because it relates to another company, GAIL, and information that it has shared with the exchanges as part of its investor presentation. Somit, what stands out here?
Well, yes, Petronet LNG has been buzzing in trade. The stock is up more than 3% in trade. Now, here's what we have found out from GAIL's presentation. So, GAIL released its Q4 presentation yesterday, and do remember that GAIL owns close to 12.5% stake in Petronet LNG. So, as part of the presentation, GAIL had also given the profitability numbers for its associate companies, and Petronet LNG is one of its associate companies. Now, as per the presentation, FY25 profit of Petronet LNG for GAIL stood at close to 503 crore rupees. Now back calculating this, which means that this 503 crore profit is for the 12.5% stake. So if you calculate for the 100%, then for Petronet LNG, FY25 profitability number stands at close to 4,024 odd crore rupees. Now if you deduct the 9-month profitability of Petronet from that, which stood at close to 2,850 crore rupees, the fourth quarter profit number of Petronet LNG is something that you can get, and that stands at close to 1,170 odd crore rupees, which is way higher compared to what the street estimate number is, which stands at close to 814 crore rupees, a clear beat of 44% that Petronet LNG could report in the fourth quarter numbers, and this has come in much ahead of the result date for Petronet LNG. So that's the reason why Petronet LNG has been buzzing in trade, and the stock is up 3% currently on the back of higher profitability expectations that the street has after seeing the profit numbers of Petronet LNG in GAIL presentation.
Yeah, 3% higher. Thanks so much, Somit, for joining in and giving us that perspective. 3% higher for Petronet LNG. Keep that on your radar. In the meanwhile, we're completely out of time on this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Up next is Know Your Company.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?